It's 8:30. We'll call the meeting to order. Roll call, please.
John Reichheimer.
Here.
Stacy Hessel. Mark Helwig. Mark's online. Tom Duffy. Jeff Haney. You have a quorum.
Thank you. Pledge of allegiance. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Please read the certification of compliance with open meeting law.
This meeting was noticed to the media and the public as required by Section 19.84 of the Wisconsin statutes.
Thank you. The meeting agenda is set. Public comments. I have Linda Zelmer.
Good morning, Linda Zilmer, Edgewater property owner and property taxpayer. My public comment today is about what you as a county board have identified as one of your top priorities under your initial strategic planning exercise, and that is of overseeing your finances. And I want to ask this committee, and I'll probably make comment at administration as well, that when this audit report gets presented to the finance committee, that it also gets presented to the full county board. Last year, what was presented to this committee was a smaller booklet that primarily consisted of fund balances, and the bigger booklet that actually showed how the county performed over the previous year was not reviewed. So really, most of the county board, and including this committee, did not really see how the county's finances played out for that year. So I guess I would ask if it's with the will of this committee to have a full presentation. And also with my audit background, I'm wondering if the committee can ask the auditor to explain whether the county has written internal controls, whether the audit team does a test of internal controls, and that's done to provide them with some assurance as to the numbers that they look at, that the test items that they pull represent the financial statements as a whole. Thank you.
Consider approval of minutes from previous meeting. Is there somebody online?
Mark Helwig and the CLA representative.
It's okay. Consider approval, motion. Motion by Tom Duffy. Second by Stacy Hessel. Any discussion? Okay, minutes approved. Oh, all those in favor?
Aye.
Anybody opposed? Minutes approved. Okay, the Clifton Larson Allen 24 audit report.
Good morning, everyone. Are you able to hear me okay?
Yes.
Okay. And am I on camera or video? Because I can certainly go on video if I'm...
No, either, whatever you prefer. We can hear you real clear.
Okay.
April, can I interrupt 1 minute quick?
Certainly, Mike. Yep.
Mark, we emailed you the audit report since you're not here at the meeting. So if you open up your email, you'll be able to follow along.
Thank you very much.
You bet.
Okay, well, thank you very much for having me here today to share the results of the 2024 audit. The full audit report is available to you, and that is 94 pages long. So what we will go over here as a condensed kind of executive audit summary. And so that's what you should have available, and if you want to follow along, that is what we'll be focusing in on. So that is taking some of the key pieces of information out of that full 94-page audit report and summarizing it here. And within this executive audit summary, when we look at some of the numbers, we also show some historical numbers too, so we can see how things have changed and if there's any trends that we want to point out. So with that, we will get started with the executive audit summary. And just starting on page 1, the audit findings and results, just the overall high-level results of the audit. The second paragraph is the audit opinion. And so we issued an unmodified audit opinion on your financial statements for 2024. And that is the highest audit opinion that you can receive. And so that is stating that the financial statements are in accordance with generally accepted accounting principles and the governmental accounting standards that you have to follow as a governmental entity. So that's obviously what you're striving to achieve there, is that highest level of an audit opinion. The next paragraph there for internal controls, as we do go through the audit, we are required to communicate to you any deficiencies that we note in your internal controls. And here you'll see that we did report material weakness for limited segregation of duties. And this is not a new finding or weakness that we've noted. This is one that has been reported for the county for many, many years. And what this relates to is that in the different financial processes, making journal entries, receipting, disbursements, payroll, not one person should have access to the different parts of that process. They shouldn't be initiating the transaction. They shouldn't be reviewing or reporting on the transaction and reconciling the transaction. So in some instances, it's not necessarily feasible that one person might not have the various access to the different parts of different processes. And so that is where the limited segregation of duties comes into play. However, one thing to point out here is that to mitigate the risk of anything occurring, because the segregation of duties exists, is to have reviews and approval processes in place, multiple people involved in the different processes. And so with that, the county does have, good reviews and approvals in place to help mitigate this deficiency. I would like to point out that in the past, we have also issued a material weakness for material audit adjustments that we've proposed during the audit. And here you'll see that we didn't have that deficiency this year. So, hats off to Mike and Randy and the rest of the team there that are working hard to eliminate a lot of the adjustments that we may have made in the past, so that the numbers that we do get initially during the audit, aren't having to be adjusted to get to the final numbers presented in the financial statements. So hats off to that as far as being able to eliminate that deficiency that had previously been reported. Then the very final paragraph on this page is compliance. So not only do we issue a report on the financial statements themselves, but due to the amount of federal and state funding that the county receives, we also do what's called a single audit. And so that is compliance with some of those grant requirements of that funding that you do get from the federal and state governments. And so with that, we did not have any issues noted during that compliance testing that we needed to report as a deficiency or weakness. So positive results there as well. So as I said, this is the high level results of the audit, and now we'll jump into some of the actual numbers and financial results. And so we will go to page 6 in the executive audit summary, where those financial statement notations begin. And on this page, we are starting with the general fund. So this is the main operating fund of the county. And here you'll see, as I said, we show 4 years of information so we can kind of see how things may be trending, if they're trending a certain way that we want to point out. So with the general fund here, we start with the balance sheet, and we have your assets, then your liabilities, and the net of the assets less the liabilities is that fund balance. And so I didn't really have anything real specific to point out in each one of these lines. A lot of the changes from year to year on your balance sheet might simply just be timing of activities, whether it happened before year end or after year end, payments being made or receipts coming in. And so there was no significant changes over the last few years with anything that I wanted to point out there. So where I will focus the time here is in that fund balance section. As I said, your assets less your liabilities is that fund balance. And so that's what's really considered available for the general fund to continue, operating and providing services into the future. And so in that fund balance section, you'll see that your overall fund balance increased $875,000 from the end of 23 to the end of 24, with an overall total fund balance of $13 million. So some of the reasons of that increase of $875,000 was that you had some favorable amounts in sales tax that were above what you had budgeted. Stumpage was a significant amount of revenue in the current year. Interest, the market rates have been better in the last couple of years, and so your interest earnings were also favorable for the county in 2024. Along with that, some of your expenses came in under budget, and so ultimately that's what resulted or ended up with the $875,000 increase in your fund balance for the year. So when we do look at that fund balance, the $13 million that you have available at the end of 2024, it is broken down into different categories. And so you'll see that about $1.185 million of that fund balance is considered non-spendable. And so that is amounts that are sitting up in your assets, but aren't necessarily in a spendable form per se. They're not kind of cash equivalents or assets that are expected to be available in the near future. So that relates to the prepaid items that are in your assets, that cash has already gone out, been spent. It's not available. It's just going to be applied to expenditures in the future year. And then there's also a portion of delinquent taxes that sits in that non-spendable amount for what hasn't been collected shortly after year end and isn't really considered available for spending at that point in time until it is actually collected. So we kind of break off that non-spendable portion. And then there's also the next segment is committed. So you have a little over $1 million of committed fund balance. And most of that relates to your fund balance that you applied in your subsequent budget. So in the 2025 budget, you applied about $1 million of fund balance. And so again, that's not necessarily, you've already identified the purpose of that $1 million. And so that's not necessarily available to be used for general operations then otherwise going forward. Then the next category, you'll see there is assigned fund balance, and you have about $1.362 million sitting in that fund balance category. And that what that relates to is set aside amounts that the board has specifically identified these funds to be used for. And so again, they're identified to be used for those specific purposes, and so they're not really available for the general operations moving forward. And so what makes up some of that 1.3 million is that you've set aside about 900,000 for employee benefits. So that relates to accrued compensated absences that your employees have earned through the end of 2024, along with some health benefits that you've set aside. You know that you're going to have those expenditures in the future, and so you've set aside that fund balance to be able to help offset those expenditures when they are incurred. And then another major portion of that 1.3 million assigned fund balance is that $400,000 has been assigned for ambulance services and ambulance activity moving forward. So ultimately then what's left after you take out those three categories of fund balance is that unassigned fund balance. So that is what is considered truly available moving forward for your operations. And so you'll see that that fund balance increased a couple $100,000 to 9.779 million at the end of 2024. So what a benchmark that we look at related to the fund balance is that unassigned fund balance compared to your general fund expenditure, annual expenditures for the year. And so you'll see that percentage right underneath the liabilities and fund balance total. And at 12/31/2024, that percentage was at 60.8%. And so the county's policy is to have that percentage at least between 20 to 30%. The general recommendation is about 25 to 33%. And average of the counties that we work with in Northwest Wisconsin is slightly above that kind of recommended, and most of them fall between 35 to 40%. So even though that percentage went down slightly from 2023, you're still at a good level of unassigned fund balance there to carry you through to move forward with your operations and to have some available funding for those unknown expenditures that could potentially arise into the future. So overall, positive results for your general fund, being able to add to that fund balance and keep it at a level that you've kind of consistently been at the last couple of years for that unassigned, to be able to move forward with your general operations into the future. So that is the general fund overall. And I can't quite remember how we do this, if there's questions as I go, or if you want me to just keep going. And
I have a quick question. Maybe it's for Mike. So in 21, we were 39% of unassigned, and so we're 20-something% higher than that. What do we attribute? That's good. What do we attribute that to?
It's really the things that April mentioned. We had quite an increase in sales tax revenue from 21 forward. Interest income went from 200,000 a year to over $1 million a year, and that has held for about 3 years now, almost 3 years. And then timber sales have been strong, consistently over what was budgeted.
All right, so she did say that. I just wasn't connecting it with this. Oh,
Yeah,
sorry.
yeah, and that's what contributes to it. In 2022, there was also a healthy net income, and that's when the board allocated, I think it was 1.5 million to HHS. And then we didn't have to do that in 23 because HHS had a healthy year themselves in 22, plus that 1.5 million put their own fund balance at over 2 million. This year we are drawing that down pretty low to probably under 200,000. So we will have to make a significant transfer there again. One thing I would mention is we haven't carried, like our three major funds are general fund, highway, HHS. Those are our three major expenditures. Highway does not have an unassigned fund balance. It's actually negative. There, on the surface, it looks like there's a healthy fund balance, but it's really all due to equipment, which we would have to sell that to actually have the cash. And then HHS, after this year, will be pretty much at zero. So when I look at the fund balance overall, it looks high for general fund, but that also is covering a $6.4 million highway.
So although
budget
this
and a
is
$10 million
much higher than the
HHS.
25% recommended, it's not like we're happy to keep it there. It's not like.
Correct.
Sometimes too much of a good thing is too much of a good thing, but this is.
Yeah, if we could allocate fund balance from here to those other two funds to get them at the 30%, and then that would bring this down to about
Okay.
30% as well.
Thank you.
Yep.
Okay, thank you. You can keep going now, April.
okay, well, and that is, Mike kind of alluded to then segueing into the next section is where we look at your special revenue funds, which includes HHS. And so he did allude a little bit to that as far as so item number 2 here, just giving you a high level, the special revenue funds are kind of considered self-sustaining funds. So these are breakouts of specific activities where specific revenues are coming in to cover those particular programs or activities. I won't identify or go over every single line item here, but the very top one is that Health and Human Services Fund. And as he alluded to, you've had to make some big, significant transfers throughout the years potentially. And in 2024, there was actually a $1.3 million transfer that was made to get that fund balance, or to kind of maintain that fund balance in HHS, because you did have some, higher costs. It's really hard with that kind of activity because some years you'll have some pretty high cost expenditures and programs and services that you're providing. And so you did supplement and cover some of that. And then obviously, Mike, looking forward, or how this year's going and looking forward, noted that that fund balance will be getting lower this coming year. So again, you have some availability in the general fund to continue to help subsidize and maintain those programs that you're providing in HHS. With that, the other couple items that I was just going to note with these special revenue funds, most of them are pretty consistent from year to year for those particular activities and programs that are being run through them. One that I wanted to point out kind of in the middle of the page is the ARPA fund. And so that's, you get that funding in 21 and 22 and now have been spending it down. So that shows a zero balance because it wasn't recognized and a fund balance was not carried in that fund until the funding was spent, and then it was recognized as revenue. So at the end of 2024, only about $200,000 of that funding had remained. You had obligated it to be spent by the requirements of that funding. A couple others that I wanted to simply point out is towards the bottom. Some newer funding in the last couple of years is that opioid settlement, and then the LATCIF funding. And so you'll see that opioid settlement started back in 2022. And so you have continued to receive those annual settlement payments. And you have just had a small amount of expenditure so far utilizing that funding. So that fund balance did increase from $136,000 to $301,000 in 2024. And then as far as the LATCIF fundings, that's similar to the ARPA, and that you have about $755,000 that was received of that funding. It just is not recognized till you actually expend it, so it's not sitting in fund balance there. So you show a zero fund balance, but there is about $755,000 in that fund to be used for those particular expenditures going forward.
Well, I see LCO State Gaming Compact listed, but there's no revenue there. Why is it on the list?
And so there is actually, I think that is one that gets about 50,000. So this is just showing the ending fund balance for these funds at the end of each year. And so there is actually activity that goes through there, and I believe
Okay,
that's
there's
where.
it's all spent.
Yes, exactly. That's kind of a flow. I believe that particular one is like $50,000 or $55,000 coming in, and then it goes out as well.
What's behind that? Like, so it's 50,000. Where does that number come from?
I believe it's a state revenue that is received by the county, but then it is passed through to LCO.
So it's state money going to LCO, then going to us.
No, going to you first and then to LCO.
Then
So
we give it to
it's-
LCO.
Yeah,
So
Yep.
we get 50 grand from the state, and then we give it to LCO for them to have a casino
maybe Mike.
surrounded by Sawyer County.
Yeah,
This is a payment that comes to us and it supplements our criminal justice coordinator.
So it does come to, we don't give
Yeah.
it back to them.
No.
And the 50 grand was determined how again?
It was an agreement years ago, and we didn't get it.
And is it, and you said it goes for where?
Criminal justice. So
And does that offset the criminal justice
it
cost?
offsets our Justice Point program.
Dollar for dollar?
No, a portion. We get grants for that as well. There's some county
Well,
allocation.
it offsets our criminal, like, I don't understand, so it's their contribution to our criminal services, I guess.
Correct.
Okay.
The one that's a pass-through is actually the coordinated law enforcement grant. So that is one that we apply for with LCO. The money flows through us and goes to LCO.
Yeah, I guess I'll leave it at this. I mean, so it's going towards our criminal services, which I guess they're contributing to. So we see there's a cost there.
Like drug court, that kind of stuff.
Does it, I mean, my point is, if it's costing us 100,000, but we're only getting 50, should that thing be looked at from time to time?
Comes from the state.
Yeah. As far as I know, the
We have no
amount is
say in it, I
set.
guess what you're saying.
Yeah.
Okay. Okay, thank you.
Okay, yeah, and if you wanted to be able to kind of see more of the activity that actually occurred then in each one of these funds during the year, you could look at the statement of revenues and expenditures within the full financial statements that actually, lists out, shows a column for each one of these funds and that activity throughout the year. So that is what I wanted to highlight with the special revenue funds. We will move on to item number 3, which is your debt service fund then. And generally, your debt service fund runs a pretty low balance because generally you have the revenues coming in here to pay for your principal and interest on your debt throughout the year. You'll see that a couple years ago, it did increase a little bit because you issued debt and there was a premium on that debt that you were able to put into this fund to help offset some of the interest and principal costs going forward. So at the end of 2024, you have about $20,000 of that left in the fund balance. And during 2024, through this fund, you paid $1.6 million of principal on your general obligation debt and about $380,000 of interest on your debt through this fund. Item number 4 then goes through the various capital project funds that the county reports. And here, capital project funds generally do have ups and downs and, some significant changes from year to year because you issue debt in 2022 and 2023, the county issued debt, and now you've spent that down on those particular projects and capital purchases that the debt was issued for. So at the end of 2024, in that 2024 capital projects, you have about $442,000 left for those particular purposes that debt was issued for. So again, that will, for these particular funds, it will increase and decrease with the changes and when you're issuing that debt and receiving funding to pay for those capital expenditures. Item number 5, the enterprise funds. Then, as Mike referred to a little bit earlier, you have your highway department that is reported as an enterprise fund. And so a couple things that Mike did sort of mention already. Here on this page, we do show a little bit more of the detail for the highway department. You have your balance sheet with your assets at the top, less your liabilities, and that gets you down to net position, or kind of the equivalent to fund balance that we talked about in the general fund. So a couple of things to note here for your highway department. on the very top line, that cash and investments line, you'll see that really this department at the end of the year has minimal cash that is available at 12/31, and that has generally been the situation for the last few years. And so what happens there is kind of due to timing of when some receipts are received from the state and then when some of your expenditures are paid out at the end of the year, that ends up with no cash available in the highway department. So it basically gets a loaned amount from the general fund to help offset or cash flow those expenditures ahead of time. So in the liability section, the third line item down, due to other funds, you'll see that at the end of 2024, there was a $535,000 kind of interfund loan with the general fund for that purpose. So you will see that that did decrease from the last couple years where it was up closer to $800,000. But then ultimately, as I said, what you're looking at here is that net position, the net of your assets and your liabilities. And as Mike had mentioned, this net position is broken down into 3 different categories. Your net investment in capital assets, which is $3.9 million basically. And so what that is the investment that you've put into your machinery and equipment, less the depreciation and any outstanding liabilities related to that. So that, as he said, isn't necessarily readily available per se unless you were to sell all that equipment. So what the net of what remains is that unrestricted, and as you could see, that is a negative net position of $416,000 at the end of 2024. And so again, there's transfers that are coming in to help offset some of these costs in the highway department. And in 2024, the transfer from the general fund was about $750,000, as well as some transfer from the capital projects funds for some of that debt that was issued to offset some of the capital projects that occur within the highway department. So what we do, benchmark that we kind of look at here is that very last line item right underneath the balance sheet is that current ratio. So the current ratio is your current assets, so what's readily available in your assets to your current liabilities that will, need to be paid in the near term. And you want that to be at least a 1-to-1 ratio, and you'll see that you are over 1-to-1, you're at 1.4. So even though you don't necessarily have some available cash per se at the end of 2024, you do have like accounts receivable and due from other governments that are expected to be collected in the near term after year end to be able to pay for your current liabilities. So in the end, your overall net position for the highway department did increase by about $99,000. However, your unrestricted did increase to the negative side of things by up to that $416,000. So, and that is generally common thing that we see with highway departments as far as how the activity occurs and the capital projects and things that happen there, that generally there's not really a lot of available cash necessarily unless, transfers are being made up front or ahead of time. So this is a very common kind of result of the highway department in that you were able to provide these services and have these projects, and then that funding is coming, from those other resources. So then the very last fund type that the county reports is in item number 6, the internal service fund. And here you just have an office supplies type fund. So what this means is it's activity that is basically being provided to other departments of the county, so within the county. And so generally this type of fund would run a small fund balance or net position, if anything. And you will see that over the last couple of years, this net position has become negative and is running a little bit of a deficit. So you'll just have to reallocate those costs that have occurred in and have those covered by the various departments that receive the services coming through this fund. So those are all the different fund types and the different fund results for the county for 2024. The very last item that we like to highlight in this executive audit summary is just the outstanding long-term obligations that the county has. And so in item number 7, you'll see the general obligation notes and bonds. And so in 2022 and 2023, you did issue some capital project debt. And now that has been paid down a little bit. So at the end of 24, you had 10.6 million outstanding of that debt to be paid out into the future. And one thing we look at there is that every county, municipality, school district in the state has a general obligation debt limit. And for the county, or for a county, it's 5% of the equalized valuation within the county boundaries. And so you'll see that your overall debt limit is 302 million. And so your outstanding debt of 10.6 million is about 3.5% of that limit capacity, that full capacity that the county has. So with the counties that we do work with in Northwest Wisconsin, the average is about 0 to 20%. So generally, counties don't utilize too much of their debt limit because they have a significant amount. But sometimes with some capital projects and things occurring, it does creep up a little bit, but your percentage is at 3.5% and you've been pretty low there. So, you haven't had to use too much of that debt limit capacity. The other long-term obligations that you'll see here is that vested sick leave and vacation. And so you have about 1.4 to 1.5 million overall of that estimated liability that your employees have earned in sick vacation type leave to be paid in the future. And one thing that I want to remind you thereof is that you have this potential liability that, will be paid as your employees take that benefit. But if you remember during the general fund conversation, I did mention that you do have assigned, so you've set aside some of that fund balance in the general fund to help offset these costs as they are incurred and employees take this benefit in the future. So, that's positive that you're able to set aside some of that funding. So then you have that available when those costs occur. So as I said, these are the highlights that we like to, obviously there's a lot of useful information within the 94-page report, the overall financial statements. However, looking through that can be a little overwhelming. And so these are the highlights that we like to go over. Overall, positive results for the general fund. You have a good fund balance level. You have that available to help maybe offset some of those upcoming expenditures and deficits that you might see in the HHS and highway fund. But overall, positive results for the year 2024. So Mike, did you want to add anything or did anybody have any questions for me?
I guess I just want to highlight one more thing. I think when Randy and I got here, we had 3 findings. One was the limited segregation of duties, which would be really hard for a county our size to ever get rid of. The other one was relying on the auditors for audit adjustments, and the final one was relying on the auditors for preparation of the financial statements. So we worked really hard, 95% of it is Randy, to get rid of those 2 other audit findings. And it's very satisfying for us that we were able to do that.
I think you're doing a great job. I think it's ideally, considering the size of what we are, it's understood, and it's not like we're ignoring it or avoiding it. There's really nothing we can do about that. But I think some of the highlights here that I see are very impressive. With the obligation of debt limit and other things here, I think it's very impressive we should be proud of it.
Excuse me, what is the equalized valuation?
Well, for this audit report, it was 6 billion. We're at about 6.4 billion now. Or you're asking what it means or what the
Yeah.
amount is?
What
It's
is
the
it?
aggregate of the value of all the properties in Sawyer County that are on the tax roll. So it excludes anything that is not taxable.
All right, thank you.
Yep.
Anything else? April, thank you very much. That was a great job.
Thank you very much. Have a good rest of your day.
You too. Number 10, Brian, Treasurer's Report.
December treasurer's report, things are kind of slowing down in the treasurer department right now. So the interim update, 13 proceeds checks were sent out. 2 of them have been cashed. The total amount of proceeds we sent out was $214,000, $317.71. 26,000 of that was cashed. So we still have 11 checks that are out there that 9 of them did come back to us. So we have to sit on them for a year and then we have to put them in the unclaimed funds. Land sales, so we started out with those 37, 35 of them were sold. The new round, we have 7 of them more that we just acquired. We're gonna start the selling, listing process here in the early spring. Delinquent listing, you can see we still continue to go in the right direction there. Real estate only is about $422,000. And with the interest and penalty, it goes up to $475,000. I'm assuming this next year that should come down because we're going to 3 years. So that should decrease there. And any questions? That's it for the treasurer.
Thank you. Move on, number 11, Finance Department Report.
All right, first item on our list is sales tax. We've collected through November. November came in a little less than anticipated or projected. However, we're still tracking above 3% increase from last year, which is significant considering from 23 to 24, we really didn't see much of an increase. So we'll take that as a positive. That distribution in November, I guess, for me, it's important to note and just keep in mind that it did come out a little bit earlier than we normally see, and that's happened a couple times in the past. So potentially the activity that's captured and sent to us may not have all been included. So we may see a difference in that December settlement that comes to us. Next item on the list is CIP purchases. Oh, budget performance report, sorry. So we are 92% on the year. So that's where you'd expect to see revenues and expenses for the year. Revenues in the general fund are tracking ahead at 98%. And as we've mentioned, we can attribute part of that to stumpage, right? Like that has tracked well above. Expenses are tracking behind. We're at 86%. So right now we're seeing a difference there of about $2 million. We'll have things coming in December to pay for. We'll have activity in January that relates back to 25. And so that number will change over time, but right now we're seeing a positive end to the year as we're moving into closing out the year. Health and Human Services, revenues are at 92%, so they're right on. Important to remember that that includes the transfer we've made to them, so they've needed that to keep them on course. And expenses are at 95% on the year. So again, a little ahead, but as we always make mention to, their activity for November isn't captured until December, and then those claims are turned in and that revenue comes back to us. So things look good there. Highway Department revenues look a little behind at 79%, and expenses are also behind at 85%. Showing a little bit negative there. They just had 2 equipment purchases, 2 trucks that we put in service. And so they're going to move out of work in progress and into service for Highway Department. And so that gives us the opportunity to make the transfer from our capital project fund, and that will help make up that deficit. Questions? CIP for the month, just one purchase, a payment to Johnson Controls for the jail air handler, and that project is now complete. This month, we're hitting dog pound and sheriff, I believe. So dog pound is first, or animal control. They finished 2024, 78% of revenues and 80% of expenses. When you look at what was budgeted, there was a deficit of about 67,000, and we finished the year at 54. So that's positive for that fund. The end of 25, revenues are tracking ahead. They don't have a lot of revenue there. They do get some revenues from rabies clinics and things like that that they hold. And then expenses are at 89%, so behind the 92% that we'd expect to see so far this year. Questions?
We don't have to go in detail on this, we can talk about it later, but on the dog pound, do we work with like Northwoods Humane at all? Or, I mean, I'm sure we have a dog pound and then there's it's not a non-kill shelter, right? That we offer? Or what do we do with the dogs that we get?
I believe we try to transfer to the Humane Society when they'll take them. They don't always take them. A lot of the times the animals we get can be a little more aggressive.
Okay.
They don't want to house them there.
But the idea is if they can, they would like to, because I know they take a lot of dogs from out of state, but I get it too. If they're troubled animals, you can't adopt them out anyways. But we do, there's an attempt there, I guess.
There
Yes.
is.
Okay,
Yep.
thank you.
Next item on the list is Sheriff's Department. In '24, their revenues finished ahead at 153% of budget. And so I just will make mention here to the fact that we've really taken into consideration the historical data now that we've seen, and have worked hard to budget according to the revenues that we're seeing coming in. So we're going to see those things a little more in line this year. And again, their expenses finished at 93% last year, so behind budget. And we've just really taken the time to dig into those and look into those, and that kind of helped us balance the budget this year when we had that initial deficit we were looking at. For 25, you can see their revenues are already ahead at 117%, so well above what was budgeted. And expenses are at 82%, so a little bit behind that 92% that we'd expect to see in that fund. And if there's no questions there, the last thing on my list is the investment report for October. Interest rates are still above 4%. Of course, we're seeing a decrease in that interest revenue just because we're not quite as high as we were in years past at this time.
And we do have a CD maturing in January that we will likely look at renewing, bringing back bids for that.
Thank you. Thank you. Board appointed committee updates. Any correspondence reports from conferences and meetings?
I will share that last week I was at the annual accounting conference that Wisconsin Government Finance holds. It was a good conference, was able to network with different auditors and finance directors and accountants from other counties. Some of the things that we looked at were health and human services and the way we budget and allocate there, and some of the GASB updates and standards that'll be coming that are just part of the audit and the way we track and record things.
Great, thanks for going to that. Any future agenda items?
Different proactiveness for, like if, for the highway committee, the highway department, you know, how we can help balance the budget for HHS, like senior resource center, library, like how we can be proactive instead of just dealing with the issues as they come up.
Actually, I'll touch on that a little bit right now if I can.
Yes, please.
Last night at Public Works, John Pinnell gave a presentation on that as part of his strategic plan response. And we have hired Bill Kern as a consultant. He actually was the highway commissioner here 30 years ago, long time ago. But he is consulting now, and it was really good. He's started to go through everything, all our equipment, showing, what our leg is and purchasing versus where it should be. And he mentioned we're in really good shape compared to other counties. But the other thing that we're doing is we are trying to better utilize our machinery, especially the state equipment, to get more reimbursement from the state. Currently, we are one of 2 counties in the state, Sawyer County and Milwaukee County, that operate under cost reimbursement. And at the time we started doing that, which was years and years ago, it worked. Kind of the way it is now, it almost encourages inefficiency, because whatever you don't make up in use of the equipment, the state reimburses a portion of that. But what we want to do is utilize the state equipment more to get a higher reimbursement, which will, down the road, and this is, like we've talked about HHS, things we're working with, this is going to take some time to turn around as well, but it will reduce our need for CIP borrowing for equipment in the future, because we will eventually build up an equipment fund by utilizing it more efficiently that will help purchase the new equipment.
Is there any savings possibly to be had from consolidating the 2 garages?
That's
They're
another
both
thing.
south of the county, but they're like not too far away from each other. Should we
Yeah.
just have one, and is there
Well, we've
can you
got
make money on
3
selling the other, or use the other property for something else, or sell it, or?
Those are all things we're looking at as, as part of the strategic plan and long-term planning as far as equipment and buildings. So we don't have a lot of information on the buildings yet, but one thing John mentioned was every snow event we have, the guys have to hook up their plow in the morning and unhook it at night. And that is because our facility doesn't have room to get the vehicles into the garage with the plow on. So that's 16 hours every snow event that we're doing that. So if we had a different facility that allowed for that storage,
Had that in mind when you're
we
building it,
could,
right?
we could combine routes and eliminate routes, potentially pick up some town work, some plowing, so we're looking at everything.
Yeah, Mike, and sometimes that plow situation brings up overtime pay.
Almost always, yeah, because if it's a snow event already, it's likely already going to push into overtime, and then when we're wasting 2 hours a day doing that, it likely will cause overtime.
I just want to add that it sounds like they have a really good plan going forward for what John was talking about last night.
The outline is very well thought out.
What effect, if any, has the second judge had on the number of inmates? We earlier thought the second judge would.
Well, that's an interesting
substantially
question.
inmates.
So there are a couple things that really went on at the same time. So it's hard to say where credit is due, but the combination of the things has effectively reduced our jail population. Like 2 years ago, we were right around 100, a little over 100. Now we're hovering right around 60, and we are no longer transferring, which is part of the reason the sheriff has come under budget the last 2 years, is we were spending a lot of money transferring and housing in Barron County. We're no longer
That was
doing
for the
that.
women, getting them out of.
Correct,
the county.
yep. And even some men at the time. So
Don't get us out of the county.
we're down about 40% of where we were in the jail population, Obviously, a lot of it's got to be a second courtroom because we're able to process faster. The other thing we instituted about the same time is, touched on it earlier, the criminal justice. We brought in Justice Point to work with,
Alcoholics.
well, inmates and offenders and whatever, so that they don't repeat. And I believe it's proving effective. So there are many factors. No one wants to take credit in case it goes back up. They don't want to take credit for going back up, but whatever we're doing, it's working.
And another matter, what are our CD rates now?
What's CE rate?
Okay.
CD rate? Oh, they're still over 4. Yeah, the January one, it's going to depend a little bit on if the feds reduce the rates again before year end, but the January one, if we reissue that, could likely be under 4%.
All right, we're adjourned. Thank you, everyone.